So far today, we've heard from private equity investors, we've heard from venture capital investors about what they expect from the decade that's going to come. For this panel, we want to swivel a little bit and listen to startups and young businesses themselves and ask them for the same thing, basically, what the next decade looks like, especially for businesses that want to grow, when they want to grow out of those early garage years and start crossing geographies, they're competing in sectors where the regulator is taking more interest in them. For instance, today we heard about the Supreme Court striking down the ban on cryptocurrency trading. And so there's a little tension between what the regulator says, what the court says, and how do businesses in those sectors sort of navigate that space. And we're going to hear from the investors as well and ask them what they expect from these businesses. So Aditya, I'd like to start with you. You've told me that Indigo Airlines was a company that started on your laptop, and in 10 years, it's become the third largest airline in the world. And in your time there as CEO, you saw through that massive expansion. You saw them through a very successful IPO. And now you're bringing that experience to Oyo rooms. Oyo is going international. China is your largest market now. So what's the same? What's different? Tell us what's the highs and what are the lessons that you're learning from Indigo that you're now applying to Oyo?
Well, I think the very first lesson is the fact that India still remains a fundamentally supply-constrained market. And there are enough hard problems to solve out there, which, with the use of technology and with a different way or approach to the same old problem, you can create really exciting businesses, for one. The second is that it is always going to be a very slow, hard journey. Every overnight success is a 10-year story at least, and therefore it requires a lot of patience and a lot of tenacity and just being able to kind of run that marathon, and every once in a while look for opportunities to sprint. And the third is that I guess the repeated lesson that you might hear from everybody else on the panel as well, that ideas are great, and then you have these really imaginative entrepreneurs and teams, but finally in a country like India, what I've found is the difference between success and failure really comes down to execution and culture, right? So I think those are the things that I see as things which are very, very similar. What's different is that the pace of change is that much faster. The geographical spread of a company like Oyo is significantly more than what I had at Indigo. And the third is that there is a lot more attention and on everything. So, pun unintended, even if you sneeze, it'll be in the newspapers the next morning. Yeah.
Right. Yeah, so how Oyo specifically is under a lot of scrutiny now, a lot of questions about the decisions that you're taking. So take us through that, and is that hampering your ambitions at how fast you want to grow with Oyo?
No, not really. I mean, in that I'm used to, even in my previous business. Because whenever you're doing something new, and that just not only goes for me, I think for almost anybody, many people in the room that I know, people who are sitting on the panel, these are things that are new not just for the consumers, but it's new for the regulator, it's new for tax authorities, and so on and so forth, and definitely new also for the press. And therefore, it's not at all unreasonable for folks to kind of question why you're doing it this way or not. So, for example, at Oyo, we're only 7 years old, and today we are the second largest hospitality company in the world. And we've gone through 3 sort of rapid phases, right? We've gone through a phase of where you're just starting up. Hardika was talking about her own business, and she said the first 2 years was an extended pilot. And I think that resonates, I think, with most of us. Yeah, it does feel like an extended pilot. And then there was stage 2, where once then you kind of looked at a very different market like China, and then created enough of a presence there where China has become the largest market for Oyo. And then there's a third phase where we did 2 things at the same time. One, consolidated and improved profitability and gross margins and so on and so forth in our main market, our original market, India, and also went to 80 different countries, as opposed to the 4 countries we were in, give or take 1.5 years ago. And now we're going into that next phase where we're saying there is going to be markets like India which will race towards profitability earlier. There'll be markets like China where we will now start improving gross margin because we've got enough market share. And then there are markets like Latin America, United States, the UK, Spain, etc., where we will invest much more into that growth of that business. So in the last 1 year itself, in the last financial year itself, from less than maybe 1% of our revenues coming from outside India, today 2/3 of our revenues come from outside India. From being 4 countries, we're in 80 countries. From, we've halved our losses, we've improved our gross margin by 40 percentage points in the last 1 year. So I think it's just one of those things, to answer your question. It is the burden of leaders like us to go out there and explain to people what we are doing and why we are doing it. That doesn't faze me too much, actually.
Right, okay. Hardika, I'd like to come to you now. You work in lending, and as an NBFC, life must seem like a constant quest for liquidity. And you want to grow Kinara right, bang in the middle of a liquidity crisis. It's been going on for 18 months. Everybody is crying out for funds. And yet you continue lending, you're raising funds, you continue lending, you're focused and to a target group that would be deemed as high risk, you don't take collaterals. So how is that happening, and are there points at which you've considered maybe changing the business model to sort of suit the pace at which you want to grow?
So let me start with the last point first. Our thesis has always been to focus on the sub 10 lakh micro enterprise segment. And we have been focused in that area from day 1 till now, so we have not changed focus there at all. We've done some 50,000 loans, and yes, the liquidity crisis hit us as it did everybody else. However, and there is a little bit of the timing thing that all the entrepreneurs will talk to you about, but in our case as well, we have been a profitable entity for 4 years, and so when the liquidity crisis did hit, we came into a situation where we were a profitable fintech, servicing a very unique market space, doing it at girth, right? We were systemically important and in a governance structure that was very clear and transparent and simple. And sometimes simplicity helps. So as lenders started opening up lines and looked at the asset liability mismatch, which we didn't have any, and looked at entities that were then therefore fundable, our name kept coming up, and we have been able to get capital in these headwind markets through the crisis and even on every day beyond, which has allowed us to continue to lend to a very, it's a very susceptible market segment that is caught up in the same whirlwind. And I think that's both, our fortunate outcome, but also a great testament to the team that is working on making sure that our fundamentals of a business model hold good, which is the one bit that in a headwind market that is important, is to make sure that the fundamentals are there, that others feel the same way and can back you up when you need it.
And do you feel there's a tension between growth and the scrutiny that you face from a regulator? And you work in a highly regulated industry, so. Yeah,
the growth, it's such a, I think we are our own worst enemies sometimes when we talk about growth because, in one sense, as Kinara Capital, we have grown over 100% year on year. And yet, is that the right number? What is the number? I know that when I was first starting out, and we were having this conversation earlier, as a female founder, the assumption was that women don't build growth businesses or know how to grow and scale businesses, and there's that perception that comes into the picture, and yet there's growth is it has to be managed to the various outcomes you're seeking. We are in a market segment that is less understood. We are in a market segment that is highly informal and where the verifiability of information is low, and yet we are able to service them and do that fast so that they can grow their business. So sometimes that's a better measure, is how many of them have been able to sustain and grow their business, which is a testament to then our ability to service them.
Right, good point, yeah.
And I guess especially in the business that you're in, Hardika, I mean, it is how businesses like yourselves are completely making it so much simpler for that small and medium enterprise to go credit when they need it. Actually, they need it most of the time, almost all the time. They're always in the market, but there are just so many inefficiencies in the legacy way of doing things. That is the big social impact that you're making as well, right?
Significant. Our ability to deliver them a loan from the first hello to money in the bank is 5 to 7 days. That's 80% better than anybody else can service this segment of the market, right? So that is the value add.
Yeah, and technology. I'm sure you're using machine learning now, right? To increase the pace at which...
is the one differentiator that allows us to do that. Because while we have last mile service and last mile delivery, and we need that, and our customers need that. We need that high touch portion of the equation. The rest of it can only happen with the use of technology. And that's what is the enabling element of this. And now with machine learning, we've been able to see even our own bias in thinking about our customer segments and how that changes when the data shows you something completely different, and needing to reframe what we do and how we can then be more inclusive rather than, judgmental.
Okay, Sumer, at Softbank, you're backing the most well-known startups and young businesses in India, many of whom are now moving abroad, looking at international markets. So clearly capital is something they would always need, and Softbank is seen as a company, as an investor with, limitless capital. But that is not the incentive they should be working on, that, that capital is always available, that checks will always be signed. So what's your advice to companies looking to grow? At some point, it has to change from maybe just scale and we should look at other metrics maybe.
No, I think number one advice we give is, yes, SoftBank does have capital, and we are well placed to give it. But if you don't respect the capital, I don't think it's going to come. That's not only for SoftBank. I think that's for any investor. So I think for us, the focus is the important 3 pillars for any company, whether it be in financial services, B2B, or consumer facing. It's the consumer, it's the product, and I think it's the employees. And if all 3 of them are in sync, you will have a business which is viable. There should be inherent margins, and look, the expectations of margins and unit economics working is at a different stage of the company. So I think when we come in, we definitely want to see some evidence of that. And I think, like you heard, Oyo India is a highly positive unit economics profitable business. And that's what we want to see as a sample set, and then we can take it abroad. And I think that's important. So if you have those 3 pillars in place, you respect capital, you show that the model works, then I think the capital will always be available.
When we look at startups and young businesses, and I think the media is responsible for this as well, we're taken in by unicorns and valuation. Is that a metric that's sustainable in the next decade, or is it a vanity metrics? Do we have to look at other things? Is profitability going to, take more mind space now?
So I think the both are extremely linked. I don't think you can go after a valuation number without the right metric, right? So like I said, at different times of the company's evolution, the first metric might be how many people are using it. The second might be what's the cohort, what it repeats. Then it's what's the revenue, and then eventually it will be profitability and cash flow. And the valuation will move according to that. So I think if you see any of the large, I mean, you keep calling them startups, but they're not startups anymore.
They're not, but what else do we call them?
Impact on economy, number of employees, valuation, whatever it might be. If you see any of these companies, if the product is not correct, the customers are not coming back, the valuation is temporary. And so that's the outcome.
I mean, you know, from an inside perspective, I'll maybe say two things to that. One, why should we even be satisfied with $1 billion valuation? Why should it not be 10? Why should it not be 100? Why should not be 4 or 5 companies aiming at $1 trillion valuation out of India? Given the fact that we are sitting on such a large market, to the point Sumer was making, that if you can get the products and the customers aligned, and you know, with respect for those who are providing the capital, then you know, I think we're getting too easily satisfied by those headlines. That's one part of it, and therefore we should aim to be the world's best. The outcome of it will be a certain valuation number. But the second thing, I'd also tell you that, you know, sitting inside the company, when that valuation changes, our life doesn't change really, you know. We just work just as hard, and we are pushing the up a steep cliff just as hard. Nothing changes. The offices don't become bigger. The cars don't become bigger. The, you know, vada pav doesn't change into a burger. Like, you know, it still is exactly like, I mean, that's a piece of paper somebody says, and you know, other than some great orange newspapers in India, most people wrap fish in newspapers the next day, you know. So therefore, like, you know, one should try to stay unaffected by that praise as well as the criticism that comes the next morning.
Well, comments to the orange newspaper aside, Kosturi, you advise lots of such companies through their growth phases, and what are the pitfalls that you see them falling for, and your role would be to foresee it, mitigate it, try to sidestep. So tell us about that and give us some examples maybe.
Sure, okay. You know, one of the things that we typically see when there's a startup, and like you were saying, it's in a house, it's a tiny room, people don't think about the legalities and the boundaries in which they work. I mean, it's very much a question of bootstrapping, getting the product out to market, and getting in the customers, the pilots. You know, you're doing whatever it takes at that point to make the idea work. So you're not thinking far out into the future as to what should the corporate governance structure be, what kind of funding ought you to raise. You know, what are the nuances of the business that you are in? Now, for instance, Hardika, you're in the NBFC space, which is such a, you know, highly regulated market. A client came to me the other day and said, look, I want to change the way I do the KYC thing. I don't want to meet the borrower at all. Can I just do away with that process? So, you know, it's the operating on the margins which you could do as a small business, but the larger you become, the scrutiny is a lot more from the regulator. So therefore, you're going to have to rein yourself in a little bit. You're actually going to have to consult a lawyer to see whether you can do what you can, you know, what you really want to set out doing. You know, so one is that kind of the mindset of compliance. I think that needs to, you know, come slowly into the picture and into the forefront of the conversation. The second perhaps is to deal with HR and the employee issues. Because again, you know, as a startup, you are a small team, you know one another, it's a family. But the larger you get, the more people you hire. Are you doing the right ref checks? Are the background checks working? Are you training to be sensitive to diversity issues, to sexual harassment types of issues? So, you know, so those are the kinds of things that one needs to have an honest conversation sometimes with the founder and ask them to keep a watch for these types of matters. The third phase is potentially going outside of India. So one is dealing with your own culture. The second is dealing with an outside culture. So for instance, once I remember Reva, the car, they were trying to launch in one of the Scandinavian countries. And they went ahead and tried to register the brand. I think they ran into a bunch of issues. One, it turned out that Reva was a swear word, right? So now, who thought about that? But that's the kind of things you have to first, expect the unexpected a little bit, especially when you're crossing the shores. I think that's the other lesson that I would say that founders do need to keep in mind.
Aditya and Hardika, you want to go first? You have a comment?
Go ahead.
Yeah.
I think what Kosturi is saying is really important because this whole notional idea, and I think we've been at Kinara Capital, we have been probably have had to work on it. Is one side you are highly regulated, so you feel that part you've got to get down right every time. But the internal culture building is so critical, and sometimes thinking you're still a startup is your worst enemy in the situation. And we have a very female-heavy team, and when you talk about posh policies and how do we construct that in a way that everyone feels that they can still speak up becomes such an important element. And we don't think about us going into the scenario, but you need to get there fast. Otherwise, you're building. You need to move from being a startup and into building an institution, and that's the transition where I think legal support can be really useful.
Yeah. So institutionalizing your morals and what you believe in, and there should be systems for that. Aditya, you had.
Well, I used to be a lawyer for 10 years originally, so it comes a little bit easier to me, I guess. And I also then, kind of worked most of my life in a highly regulated business. The experience that I can share is that, first of all, you have to just start off with the fact that you're building an institution and you're building an organization for the long run. So there is no question of saying, let me not do this on day one. By the time I get to day 30, I'll get to it. You just start off by the bounds that the law provides. So one has to have a deep sense of respect for that. The second is, and therefore there is a cultural aspect to it. The second is that the thing that always helped me in my previous businesses has been to say to the employees that, look, or to myself, this is the rule set. This is the rule set that applies to everyone. And I respect that rule set. I want that rule set. And therefore, we must play within this. However frustrating it may be, however many times business is way ahead of what the curve of the regulation is, but you just have to stick with the rules of the game. And the reason I say that is, it's better for building a larger institution because the smaller guy is not really kind of complying with everything. So it's in the interest of building a longer institution that you have these rule sets. But the third thing, which I, having been general counsel for many years and then, worked in a regulated business and then as a business leader, the thing where I also push lawyers and policymakers is to say that, look, one has to also have the ability to, in a test bed, in a lab, to go and see what are the different policy changes, laws that we need to change to make sure that it is accretive and it is in the best interest of the business. I'll give you a very interesting example. So, very few people probably know this, that when Jet Airways started in India, private airlines were allowed to start an airline, but you were not allowed by the law to publish a schedule.
How does that work?
Right? So imagine that. So, true story that Mr. Javed Akhtar, who was the board member of Jet Airways, told Mr. Goel that, Naresh, let's do this. Let's publish that we'll have a breakfast time flight, a lunch time flight, a tea time flight, and a dinner time flight. So the early schedules of Jet Airways actually did that. Today, a member of the DIPP told me, or till recently, that I don't know if it still lasts or not, you are not allowed to use a two-wheeler for commercial purposes in India. Imagine if that were implemented today. So no more Uber Eats, no more Amazon deliveries, no more like Zomato, no more Swiggy, no more nothing. Or for that matter, if like say, 30 years ago or 40 years ago, somebody came and said at Microsoft, we want to sell these software. We used to sell computers, now we want to sell software. And the lawyers kind of turned around and said, great idea. Here is a 400-page document that every customer has to sign. But then you push them to come up with shrink wrap licenses. And today you don't even think about saying, I agree, accept it. So one has to also keep that sort of dual frame of mind where you stick with the law, but that does not prevent you from trying to see where are the opportunities to improve.
So you innovate around the law?
Yes, yes.
Okay.
And for lawyers too.
All right, Sumer, you have a slightly contrarian opinion about how cultures change in founder-driven businesses and whether they should.
Yeah, no, I think my view was only, and I think this is something what Aditya was saying, Oyo is a 7-year story. I think cultures are important, but they do take time to get built, right? And you will see in all these firms, they are young firms, they've been around only for a short period of time. So there will be a core set of people who will still do a lot of the decision making, which will take time to institutionalize over time. I think employees are important. Obviously, you have to build an amazing team. But I always get a bit scared of the word institutionalized. So corporate governance, playing by the rules, obviously, there's no two ways about that. But always vary about how institutionalized you want to make the firm, that you give up the flexibility of looking at that new opportunity. Because the great things about, and maybe the good and the bad, is you have the startups which are doing, they've captured the market they started off with, but they're amazing in finding adjacent businesses. And that's what really amazes me of these entrepreneurs. They're number one in the field, and they're like, this is not enough. Like they were saying, why 1 billion, why not 10 billion, why not 20? And I think that might go away if you make it too much of a institution.
Do you see it as an either-or situation?
Sorry. No, look, I think for me it's different. I think we definitely can't be breaking the law. You have to push it, and like you said, and not only in India, globally, the speed at which innovation is coming, the law is never going to be fast enough, right? You have to have good corporate governance. I don't think that's vital, but it has to be flexible enough that you are always ahead of your competition. Because the worst thing you can do in this culture is to sit there and say, I'm the incumbent. By definition, you have to be, people will come after you.
Yeah,
Yeah, I hear you, and I think I really feel that tone between what you're saying and what also happens, right? We are now 1,300 employees. There is a level of structure that is needed, and I'm not talking about legal structure, I'm talking about cultural structure, right? Because the bulk of your employees, and especially mine, they're split across 6 states and 110, 120 different locations. They need the guardrails, and they need to work within a frame that they're familiar with. And we need to keep that and build that, and not lose the nimble decision-making, the startup style that was there and is still core. And so one of the ways we have solved for it is we have a core machinery that works a certain way and goes down a certain path, and then we build a, sort of your sidecar innovation fail-fast team that then does that other bit that is also equally core to the growth and the adjacent market and the innovation side, which is also required not for today but for tomorrow. So it's that balancing act, which is not easy, but I think we all need to aim for it between the two to find that fine balance to keep us moving forward.
Kosturi, do you find yourself being the adult in the room, often saying, no, this is illegal, you can't do that?
Thankfully, I've never had to use those very specific words. But I think you still do have to guide around the law. I think to the point that you were making, Aditya, you have to be a little bit more pushy in terms of being able to say, okay, let's do it this way, let's not do it this way. So, so the idea should be to find a solution that works, but also, you know, to be able to articulate it in a manner where, you know, your sales team or, you know, the people who are interfacing with the customers, let's say, are able to send the message out in the same manner. Because sometimes I find that what the founder wants to do and the core team knows, the people around the fringes don't really know. So for instance, if I take the, you know, a matter like privacy, right? That's a challenge because the way the law is shifting, the way the boundaries are shifting, not just in India, but around the world, you know, these are not matters that can be taken lightly anymore. And I think that as a message, again, needs to be consistently pushed down to the customer, so the customer believes that, you know, you are the fiduciary in terms of the data that you are holding. So I mean, there are many pieces, and you can answer this in very many ways, but I think ultimately the founder has to push that message out, and the message has to go to the entire team. And some amount of structure is therefore, you know, sorry, not to be an institutional, but some amount of structure is needed, yeah. Please.
Okay, so I think I'll try to kind of again share experiences which kind of bridges both what Sumer was saying and what he was saying. Again, in my previous role, we went from first employee that I hired, Captain Shakti Lumba, to 20,000 employees when I last left, and 65 different locations, I think. On the other hand, even in my current business, we went from something like, I don't know, 7,000 or 8,000 employees to 23,000 employees that we are today in about a year and a half. So absolutely the key to success is that entrepreneurial spirit, you know, that ability. What I've often tried to talk about is that there's a difference between hustle and agility. And I think a lot of startups try to make this whole, you know, they wear hustle like a badge of honor. And my personal view, my very personal view, is that hustle is like, you know, you're going and robbing somebody in the side corner of the street, you know. Agility is what is required for companies to be nimble and adaptive and move fast. And how do you kind of create a culture around that? The one thing that I mentioned to Hardika, and this is just sheer experience, is that despite the best intentions, organizations are like human bodies. As they become older, our arteries start getting clogged, and we become slower, and we can't do many of the things that we could do when we were 10 years old. And you've got to go out there and run and declog those arteries. So when somebody is scaling up, that ability to create an entrepreneurial spirit that Sumer was mentioning as an institutional culture, one has to go out there and do 100 things every day to make sure that bureaucracy doesn't sort of start clogging up the arteries of that organization, and especially a fast scaling up one. Yeah.
Okay, we are out of time. The clock has stopped ticking. So just last question to all of you. What does the new decade look like for businesses, for startups, the new decade? What are you expecting? A change in how we work?
Oh my God. I think, you know, speaking as a lawyer, I think the compliance side of things is here to stay. So I think we're not going to get any easier on the regulation, the compliances, and more time will actually have to be spent around these aspects, and boards and corporates will have to spend a lot more of their effort making sure they understand risk and they understand impact of that risk. So, you know, in a nutshell, more laws.
Hardika?
So if I take the customer view on this, for me, the next decade is really, so when I started Kinara Capital back 8 years ago, there was this whole notional idea of India versus Bharat, which I kept being told about all the time. I think that is gone. This is digital. We have customers now who we did not think would be online. 52% of TikTok users come from household incomes of less than 25,000 rupees, right? So that whole digital piece is changing. And so our customers, how they interact with the rest of the universe is shifting. And so how we can be nimble and innovate and have that entrepreneurial attitude towards building that and engaging with them in manners that we did not think was possible 5 years ago is really the next challenge for us.
So I think for me, when we sit here maybe in a decade, I think the way education and healthcare is delivered in this country, I think is going to change dramatically. It's going to be available to everyone. That's one. And second, reasonably confident.
And you think that's going to be where technology is going to emerge?
100%.
New businesses
it's not
are
going to happen
emerge.
without technology. Okay. It has to be available to every part of this country at an affordable price. And that's a big opportunity for the country and I think for technology to solve. And optimistic that we will have a lot of tech IPOs, which everyone keeps asking about. So I think when we're sitting here in 10 years...
Are they going to list in India?
I mean, so far the regulation is we only list in India, but I mean, regardless, I think that these will be mature companies ready to hit the markets.
And Aditya will close with you and your views.
I see two big themes over the next 10 years. The challenge for businesses, products, services is how do they stay relevant in the eyes or the life of the consumer? How do they understand the changing needs of the consumer, and are you being able to be agile enough? And there are these massive matrix of consumers. So staying relevant in the life of the consumer is one big challenge and I think going to be one big theme. And those who do better will succeed. The other is I strongly believe that businesses that create deep social impact at very large scale will be the ones which will differentiate themselves and become the next Unilevers of the world and the next GEs of the world and all those companies that we look up with a lot of respect over the last 100 years. I think companies which have deep social impact and use technology to solve hard social problems and inadequacies are the ones which will still raise their head.
So education, financial
it could
services,
be actually,
across the board.
Step out, drive around, and you'll see 100 hard problems to solve, from nutrition to transportation to water to food to accommodation to transport. That each one of them is multi-billion-dollar opportunities waiting to someone to go and solve for. Yeah.
All right, I think that's all the time we have. Thank you, ladies and gentlemen. It was a stimulating conversation. I hope all of you enjoyed it as well. Thank you.